Well, hello, guys. It's Danny Deals back with you once again for another exciting episode of Un Poco Mas, the show where we give you just a little bit more on behalf of executive producer Hurricane Lopez and supervising producer Stock Karen. We would like to say hello and welcome and welcome and hello. Guys, it's Monday. The market just closed. Its Topper time check is 1:47 p.m. Pacific Standard Time on June 26th. 2023. As you can see, we are talking about the SoFi stock ticker symbol SOFI. Guys, the stock was down 8 cents or 1% on the day, holding steady after hours, $8.19. Um, Let me scooch on over here and share my screen with you guys. If you remember, oh, about a week ago, I basically saw the stock coming down. A lot of people thought it was going to break down back below $8. I really didn't think so. Of course, it did go below eight once here, but I was looking. Let me change this chart real quick so you can see a little bit more detail. I was looking for consolidation between $8.13 and $8.91. And for whatever I know, it's not that much. But I do watch this stock pretty carefully, and though I may not know all the terminology and have any, classical education and technical analysis or anything like that, I am able to recognize patterns and tendencies on charts fairly successfully. But again, I'd ask you to do your own due diligence. Don't listen to people on YouTube. We don't know anything. We're just kind of looking at the same charts and evidence you are, so you're far better off drawing your own conclusions and doing your own research and due diligence. But that said, guys, I did say the stock would consolidate in this range, which it had. And then, of course, it dropped from this $8.50 level and gapped all the way down below $8. But if you notice what happened, guys, back on the 23rd, the stock immediately recovered to this level, to this approximately $8.13 or whatever, that level was right there, I guess 8.12. But if you notice, the consolidation range, I said we'd get in every time we've come down, we recovered to that level, pushed all the way back up to, I don't know, $8.60 some cents, came back down and again found support at $8.16. Hit that actually twice. So guys, we've hit found support. Basically we're trying to flip and just confirm that we now have firm support above $8. And I think day by day we are confirming that and we are preparing to run back up. My theory, my working theory is that we are going to regain this trend line and pass the $10 level sometime around, I don't know, the 5th of July. Sometime in that, in that region. I don't know exactly when the trading days are when we're closed for the 4th, but basically I see this isn't going to be a really long period of consolidation. If you look at what happened today, basically the borrowed shares were an additional 3 million shares. There was 5 million borrowed, only 2 million return. And if you look at the cost to borrow max, it spiked today to 14% at one point, which I noted that happens pretty rarely with SoFi because everyone talks about how much dilution, how many shares there are. It's just a glut of shares. But I don't see that because I think a lot of retail investors simply are not even considering selling their shares down here at like $8, $9. Many of us simply want to hold the shares long term. So I think that the term free float can be a little bit misleading because a lot of those shares simply are not for sale. I also have my shares that I have at SoFi locked so they can't be borrowed. All you have to do at SoFi is just you can do that right on the chat. It's very, very easy. For those of you who tell me, you can't lock your shares, it's not possible. You just don't know what you're talking about. Um, if you're trading on margin or you don't actually own shares, that may be true, but I actually own, all my shares. I don't, trade on margin or trade options very often. So, you may be in a completely different situation, but I am able to lock my shares and I own a lot of shares. So I went ahead and did that because most brokers give you almost none of the money when they loan your shares out anyway. They give you like 10% of the money. So it's not worth it for me to make the pool of available shares to borrow larger for just a couple of pennies. So anyway, that's my choice, what I do. But another thing I just wanted to address briefly here is the sort of FUD that everyone's dumping the stock, guys. If you look, the last filings, Vanguard actually increased. They have 70 million shares. So if I just put this in order, guys, by date, you can see that these insiders, they're not bailing out of the company. Like, Chad Borton sold 13,000, retains 230,000. Aaron Webster, sold 100,000, still has 600,000. Derek White actually purchased shares. Lauren Webb sold 10% of her shares. This Jeremy Rochelle sold quite a bit of his shares, like 25%. But Nodo, again, last filing added, the change was almost 600,000 shares added, has 7 million shares. And then other insiders, LaPointe, again, added 90,000 shares. Freiberg added 40,000. Short, these are directors, I think. Vanguard, note, added, this report as end of May added 1.3 million shares, owns 70 million. BlackRock, again, adding, has 35 million. State Street adding, has 12 million. Geode adding, has 12 million. So, guys, if you look at this chronologically, the FUD spreaders, the FUD machine, of course, I'm the anti FUD, I'm the Duff. The FUD spreaders would have you believe this shows that insiders and institutions are dumping the stock. You don't even see another sale down here till Susquehanna dumped, Q1 dumped a little over a million shares, yet retained 7 million. That's the biggest thing you see. Like Morgan Stanley added 120 million shares and they have 5 million shares back into Q1. Millennium Management added almost 5 million shares to the million they already had. JP Morgan, even, I think they downgraded the stock, but as of 30th of April, they added 100,000 shares and they had 507,000. Now, that was probably because they're, shorting the bejesus out of the stock, those turds. But that's just how it goes sometimes. Guys, my point is this is a chronological order. This is facts over FUD, guys. Institutions are loading SoFi, guys. I mean, period. Guys, take a look at the options this week. These turd short-term options. I know a lot of people like these are institutions, these are hedges. That may be true to a certain extent, but those premiums will kind of cancel each other out because they're making multiple part trades. Where, for instance, they're selling a spread or something. But for those people who are just buying these short term, I think that's mostly very dumb, impulsive retail investors. And I believe more often than not, almost all the time, guys, these options get killed on Friday. And they never, like, if you look at the $9, there's 25,000 calls and 15,000 open interest. So that's the highest, but there's a hell of a lot of action at 850 and 950 as well. So again, I'm not the smartest guy. I don't know anything. Believe me, I already know that. I hear it every day. But, heard it every day of my life, folks. I was born under a bad sign. If it wasn't for bad luck, I wouldn't have no luck at all, guys. I've heard them all. I've heard them all. Don't care. But the fact remains, guys, when you see all these short-term calls out here, they almost always get killed. I mean, it's just a fact. Like, you guys can look back. I watch these every single week, and I have for a long, long time. And these calls, generally speaking, get killed. So I think the people that are selling covered calls, the retail, the intelligent retail, are doing quite well. But I think other, boobs are buying a lot of those calls and just hoping for some kind of news or, I don't know, lightning to strike. But if it's all hedging and it's all smart money, then, so be it. But I believe this indicates it's going to be very hard to get over $8.65 this week. And I think the chart, you know, I think basically, okay, what's Friday? The 30th. Um, so I think we're gonna maybe push up to close to $9. Probably next Monday. This chart's probably a little off. I was just drawing like nonsense on here. But I think we could push up $8.70, something like that this week. But I just think it's going to be really, really hard to break that $8.91 resistance point for a wide variety of reasons, guys. A couple other things of note, guys. ARKF, ARK Invest, the fintech deal bought in. That's Kathy Woods, of course. Kathy Wood. Um, I think there's been sort of a re-education of Kathy Wood. Not, no disrespect to Lauren Hill, but Kathy Wood is like innovation, disruption, AI, Bitcoin, all of these things, and you know, she and her team have a lot of insight. They have a lot going for them, but I think they started believing in a lot of their own celebrity. I think they started thinking their S don't stink. All of these things. They're picking companies. They're like, Teladoc is going to be the next da da da, and what happens when Teladoc goes from like 300 to whatever it is down to like 25, and you just end up looking like an idiot. And she sold out of a lot of positions after losing a lot of money. And I made a lot of money with ARK funds on the way up in that whole COVID run up. I remember ARK running, it seemed like 30 all the way up to like 160 or something. I was like, this is absurd. I'm out. I didn't sell at the very top or anything. I'm not like any perfect market timer, but I just felt like when it got hot and I had a lot of profit, I just got out of the art game and haven't been back since. But I don't think this really. A lot of people are saying this is moon. It wasn't a huge buy or anything. It's like $3 million worth of shares, but I think it's a good sign because even though a lot of people like to hate on, ARK, I think the fact that now I think they're looking for more value, not just innovation and disruption, but do you have a business model that can make money, and do you have management that can execute that plan? And I think it's become very, very clear to people that are watching and intelligent that SoFi has both. And I don't think their wheel strategy has really borne fruit yet and started to work. But I think Kathy Wood can see the writing on the wall that they're reaching a scale where that strategy is going to start to work and start to be reflected in the numbers, and they're going to start to make net profit, and institutions are going to follow her in. So I think Kathy Wood is a lot more selective now and thinks about not just the innovation, the disruption, but actually who is there, manning the store, and do they have sort of the fiscal disciplines, the vision to not just disrupt and innovate and become a new sector, but also to make money, guys, to make money for shareholders. Do you have a plan? Like, people love to talk about, companies like QuantumScape or Hylian in the EV space, or, in the fintech space, it was, Robinhood was going to displace all the banks during COVID, and, retail investors were going to kill all the hedge funds. And, what happened, guys? All that fizzled. Like the GameStops, for every GameStop, and, what are some of the other, stocks that Wall Street bets, pushed up? It's like, for every one of those, there's like 100 other stocks where retail gets slaughtered and the hedge funds make out. So the notion that, there's a new Wall Street and retail, Kramer's always doing that. He's like, retail traders are so smart, blah, blah, blah. And then he goes, gives you a bunch of horrible advice that's just going to help market makers clean your clock. But, in any case, guys, I don't know what I'm doing. I'm going off on a tangent here. Haven't made a video in a little while, so I'm even less focused than usual. But a couple of things of note with the short. Like, guys, I think the short, here's an article that just basically makes the short argument. It's Jonathan Weber in Seeking Alpha. This is June 24, so written over the weekend. But he goes through and says, basically that SoFi is looking at some pretty impressive growth, and that it's growing quickly, but there's questions around profits. And SoFi is doing more and more business. These are basically the estimates for 1 year out. They're saying, 2 billion this year, which I think is slightly lower. Then it's going to be 2.43, which I think, again, that's low. For next year, I think we're going to be over 2.5, and then 2.8 the following year. So basically, they're saying that translates into revenue business growth around 25% this year, 22% next year, and 15% the following year. And then it's basically saying that's very, very impressive growth. But, while the growth remained um, attractive in absolute terms, it would be considerably lower to what investors have gotten used to, guys. I think these numbers are very, very low. I think the shorts are underestimating the impact and the revenues Galileo will be bringing in 2 years. I think they underestimate the importance of actual deposit growth and direct deposit. Basically, the more deposits SoFi brings in, the more loans they can hold on their books, the more loans they can make. Um, I think they also are not factoring in that in 2 years, SoFi, if interest rates go down, SoFi could be originating mortgage loans, student loans could be booming. So the notion that growth is going to slow to 15% does not comport with, what I've heard from SoFi's executives, who again tend to underpromise and overdeliver. I thought their combined annual growth rate was going to be, you know, closer to like low 20s, mid 20s than, mid teens. But we just have to see how that plays out. I know as a company gets bigger, it's harder to grow as a percentage because, you're just bigger. So in absolute terms, you may be adding the same amount of members, but as a ratio of the company, it's going to be smaller and smaller. So, but Noto is basically saying like, if all goes to plan next year, they plan to be adding around 800,000 members per quarter rather than 400,000 members per quarter. So I think this assumption that SoFi's growth is just going to fall off a cliff here, I don't see that. I don't see any evidence of that. I also think they underestimate the importance of cross selling and the fact that as SoFi reaches a greater scale, they're going to have to spend less to acquire new customers because their existing customers are going to be buying more. Also, their existing customers, I think, could refer more customers when we're in a more attractive interest rate environment. Shorts are working very hard, and I think you're going to see them cover in mass during the third quarter here. I think shorts are very worried that SoFi could turn in a net profit in Q3 and absolutely skin them alive. Uh, Look, guys, I mean, you think Noto is buying, I know he's a wealthy guy. He was the CFO of the NFL. He was a, pretty high up guy over at Goldman Sachs, but he's not a billionaire, guys. I don't know exactly what his net worth is. I'm guessing it's a couple 100 million or something like that. But if you know, shoot me a comment down below. But, the guy owns what, 7 million? What is it? Last filing, Anthony Noto, 6.88 million shares as of June 14th. I mean, guys, we're talking about, what, $60 million worth of stock here. And people are thinking that this is just like, that this is some kind of scam or something. It's like, come on, guys, this isn't like a few shares he's buying. He's every time the stock dips, he absolutely loads the boat. He does not like you see, this executive selling 13,000 shares. Like Noto doesn't even get out of bed for 13,000 shares. He buys at least. He was buying 50,000 shares at a time, 100,000 shares at a time. Like the guy makes power moves. Lapointe in here buying 90,000 shares just in this last filing. I mean, Lapointe has 725,000 shares, guys. That's what the hell is 8 times 7? 56. I mean, guys, he's looking at, $6 million worth of SoFi stock. He's a relatively young CFO. I'd have to look back at his resume. I have looked at it before, but I don't know what he did before this, but my sense is he's not like a billionaire level guy either. It's got to be a huge percentage, and these are the two individuals who know more about the inner workings and the statistics and how that's all going to play out in the near and far future. And they are both putting a huge amount of their own money into the SoFi stock. So that makes me more and more confident. They say there's lots of reasons people sell stock. It's diversification, it's tax purposes, it's options, it's etc. But there's only one reason that executives and insiders make open market buys with their own money, and that is very, very simple. That is because they believe the stock is undervalued. You hear that everywhere, guys. What else do I have for you today, guys? I believe that the shorts, remember the shorts went in 3 million more shares today. If it wasn't for the guys, today they only traded 33 million shares, so volume was pretty weak. It came in fairly strong at the beginning and end of the day, made that little bowl-shaped pattern on the volume indicator. Um, but guys, we've held very strong above $8. The only dip down below that level was gapping down. The stock immediately recovered to my support zone of 812, 813, and I think we're definitely finding support above the $8 level, guys. We broke that level and about June 8th, and then retested it on June 9th, retested again June 20th, dipped down below, gap down June 23rd, and then we've retested that line, that $8.13, $8.16 line, multiple times, guys, just three times today, I believe. Um, Take a look at the daily, what was going on today. Yeah, if you notice, guys, comes down, hits this twice, guys, bounces off convincingly. This wasn't super convincing, but there's some smaller green candles there. And then this was nice, convincing buying pressure, guys, all the way up to this sort of algo hold level. You see the algo working really hard, guys. You see the shorts and the algo working very, very hard today. The FUD spreaders. Guys, what catalysts are coming up, guys? Obviously, it's the end of the quarter here in a couple of days. We're going to see earnings in about another month plus here. The Supreme Court decision, guys, I look for FUD either way, guys. I'm like, what's the weather forecast for today? The weather calls for FUD. Like the weather in SoFi land always calls for FUD. So we're talking about a Supreme Court decision coming up that decides, is the Biden administration partial student loan forgiveness plan constitutional? Um, I think whatever they decide, it's going to be FUD fodder for the sharks. If they go ahead and rule for the Biden administration for the executive power, which that's sort of my sense of how they're going to go, because I think the Supreme Court's very conservative. They have this sort of vision of a lot of executive consolidated power, sort of this unitary executive theory. But then again, they also have a lot of power placed with the state legislature, a little bit all over the place, depending on what the issue is. And then, Kavanaugh is not super predictable, and Roberts is not super predictable. So I could easily see them both coming down on that side. But either if you get forgiveness, that's going to be an easy FUD for the shorts. They're going to go, oh my God, SoFi is going to go bankrupt. They just forgave all the student loans. And they're going to get just really dumb, uninformed, reactionary people. They'll start some selling and they'll panic sell and stop people out. And that'll be a good little short attack for them. They'll make a few pennies and just, clutch, go out for a nice drink. And then if they rule, against the Biden administration, and people have to pay back all their loans, and there is no forgiveness, I think they'll spin that into FUD against the SoFi stock in the media, with the short sellers, with the analysts, the fake analyst, short seller crony turds. They're basically going to say, well, this leads to too much uncertainty. Because if you get the forgiveness, you get it out of the way, it's certainty, guys. And those are not SoFi customers anyway. And SoFi was always for similar limited forgiveness. As a public stance. I know SoFi got a lot of bad press, got beat up by the Democratic senators for their lawsuit, etc. But I think either way, this is going to be spun as FUD, because if you rule against them and there is no forgiveness, you're going to have more uncertainty. You're probably going to have more litigation. Probably going to have the administration trying to pull some other shenanigans to get some kind of forgiveness. Or try to pass legislation, try to trade it with something else for the conservatives. Who knows, guys? It's just, we want certainty. I think it's far better, even though it creates easy FUD, I think it's far better that for the forgiveness to go through, puts the whole thing behind us. We get some short-term shorts, short-term FUD, short-term bad press, but it's not real, guys. It has absolutely no effect on the company. If you go through and just take a quick look, guys, you notice that we keep retesting and buying pressure keeps coming in. There has been absolutely no appetite to sell the stock under $8, even under, really under $8.16. The stock retests twice, comes back up, runs along this sort of algo hold level, that it was on 824, 830, and then just sells off here at the end of the day. I think, again, that's just kind of the algo does what the algo does, guys. If you look at the chart, guys, I mean, let me clear this off so it's easier to see. But guys, look at the chart. We're back to the exact same thing this thing used to do. I mean, it pops up, it sells off hard in the first hour, buy back, consolidate, trade sideways, sell off the end of the day. Like, and then it fought back here on I guess that was the 20th, but again, sells off hard, buys back, trades flat, sells off hard, buys back, trades flat, gaps all the way down this time, buys back, trades flat, do a pump and dump. But the point is, guys, the old patterns that you see, like going back for years on this stock, where the algo does certain things at certain times of day, that is alive and well, and it's going to be easier and easier to see if volume continues to run out of the stock. Guys, I don't know what else I have for you. Not even sure what I've said so far, but again, another important little tidbit is that Truist, Andrew Jeffrey, who again is one of the absolute best analysts in the country, reiterated his buy rating at $11, and he tends to do that whenever the corrupt bullshit analysts like the Chia Pet and Baloney Head come out with their just out of left field downgrades. Guys who barely even cover stocks. Nobody knows Bologna covers the SoFi stock. They basically initiated coverage at this opportune time, and put a huge downside on the stock. Got his name in the press. It's kind of the same thing with some of these other analysts that sort of grandstand. The Chia Pet doesn't even list the target price anymore because I think it's humiliating when the stock was up at 10 and he's at 250 or whatever. He just looks like a complete asshole. But anyway, guys, that's the SoFi stock. Ticker symbol is SOFI. And again, if you want to compare Andrew Jeffrey to some of these other guys, he's one of the buys at 11. He is ranked number 149 out of 8,500 analysts and 433 out of 33,000 experts. And on average, his trades are successful, and his trades make successful returns. If you copied Andrew's trades, holding each position for 1 year would result in a 65.35% of your transactions generating a profit, with a 12% profit margin, I guess you could say. Or 12% profit, just to be direct. So if you look at the highly rated analysts, guys, the experienced analysts, not these like total D-bags, you'll see like Bank of America, even though they're a hold, they upgraded the price target at $10. The press didn't note that part, that they actually upgraded their price target. They just said downgrade, downgrade, downgrade. And then Kevin Barker, who's with Piper Sandler, very highly rated analyst. He's a hold at $8. I'm again not crazy about that, but that's basically where the stock is now. So again, same with Oppenheimer. He's a hold at 8, but it's basically flat. If you look at Citibank, again, they're at 10. Jeffries is at 8. Mizuho, again, Dan Dolev. He doesn't have a lot of stars here, but I really like the guy. He's very intelligent. I've heard him a number of times. But, these analysts that are at 250 and 5, I just don't think they have any credibility. I think they're short seller tools and stooges. And I just have absolutely no respect for them, no use for them. Even Stock Karen, like, she doesn't even want to talk to their manager. Like, I have no use for these guys. I don't need to even speak with their manager. Their manager's probably a piece of shit, too. I'll write directly to corporate. F you. Okay, Karen, you do that. Okay, Karen. Okay, Boomer. In any case, guys, I'm kind of rambling at this point. What else is new, right? Am I right? Or am I right? Right, 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 right. Ned? In any case, guys, Groundhog Day was a good flick. Guys, it's the SoFi stock, ticker symbol SOFI. My name is Danny Deals. Toper time check is 2:16 p.m. out here in Los Angeles. The market just closed about an hour and 15 minutes ago. Give me your thoughts on SoFi, guys. I think we're going to consolidate just briefly here between that 813 and 891 level, and then I think we're going to pop up and challenge $10 again, and hopefully break that down. But guys, don't quote me, boy, because I ain't said to quote NWA. Thanks a lot, guys. Appreciate you watching. I'm glad to be back with you. I had to take a few days off, but I am back and better than ever, or you can be the judge of that. Thanks a lot, guys. It's Danny Deals. It's Poco Moss. It's SoFi stock. We will talk at you again real soon. Bye-bye.